Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So new highs on SPY, just trailing up somewhat alongside the 9 E.M.A. Even more overbought on the ultra fast stochastic and fast stochastic. So I mean the upper limit here is 100. We're only a few points off that, so it calls into question how much further this can run. On the other hand, in trending markets, stochastics generally cease to function as well as your MACD. So we'll keep clearly the MACD in line. Looking at the weekly chart, the MACD is kind of pending that crossover. It's essentially spot on. So potential bullish crossover literally in the making here, although we do have confirmation on the fast stochastics on a weekly basis are also overbought as opposed to last week where we are in neutral territory. So from our perspective, on our side, a bit of caution is warranted. One interesting setup that was nice was on the Dow, basically, straight up move off, this move against the 200 day moving average, consolidated sideways into the 9 E.M.A, and then off to the races with a proper breakout above this kind of range highs. So quick shout out to Bulls on Wall Street on YouTube for calling to our attention this 9 E.M.A is kind of the very useful indicator or moving average that it is in terms of price actually responding to it, whether on a daily basis or intraday. So something we do watch pretty carefully. If we do in fact get a pullback, one place where we may look for a potential short opportunity would be within the small caps. So they basically have been a massive performer following again this move into that 200 D.M.A daily moving average that is. And what kind of interests us here is that it is along the lines of a few of these prior tops within 2016. You had a few peaks and just simple trend line, straight line drawn across them. Prices in that zone, whether from the two prior peaks or a consecutive series of peaks that more or less maps out a price channel. So any downside, we could look to take a move on small caps, so we'll keep that on the radar. Looking at TLT, it may be basing here. We did have a brief dip down below this 120 level discussed in prior videos where we have the 250 and 200 week moving average, so your longer term moving averages on a weekly basis. So maybe basing here potentially. We'll see. We'll see how price reacts with regard to the 9 E.M.A as well. Dollar index continuing to move higher, pretty strong, needless to say. So you're at the upper end of this price channel, sketched out back to April of this year, as well as you're above, more or less you were above briefly there, the secondary peak stretching back to 2015. So in the long run or towards the end of the year, we have to wonder if new highs won't be made in dollar index, but definitely pushing its upper limit currently. With corresponding moves down in gold gapping down on Wednesday, and again sideways consolidation into the 9 E.M.A and a good night. So pretty fascinating stuff there. Gold having taken out the slows is fairly concerning, so to speak. So the 115 now is behind us, and again looking for 110 for a possible bounce. This longer-term trend line drawn off multiple failed bear market rallies stretching back to 2013. So 110, looking at that for a level here for us as a potential swing long. Copper did break out, so breaking out beyond its declining trend line stretching back to 2011 all-time highs. So very significant week. Last week with regard to copper, we took along on Freeport FCX, so just a mining equity. On Monday, on this breakout of this bit of consolidation atop the 9 E.M.A, which had us concerned to a break to the downside, broke to the upside, so fine, took it and ran with it, and was rewarded so far. Currently holding, we'll see where we pull out, but currently not yet. But definitely, obviously, copper just very well stretched in the short term here. Arguably an inverse head and shoulders on junk, so junk holding off that bounce off that 250-day moving average, and something of an inverse head and shoulders, kind of messy, kind of misplaced, but stranger things have appeared on charts. So with the neckline at approximately this 50-day moving average 3630, you can argue. So any break above that and recapturing would kind of argue that a recapture of this price channel would be more sustainable in the long run. So definitely taking a look at junk bonds going ahead, just as sort of confirmation against the overall equity market rise. We wouldn't want to see too much of a divergence with stocks rising and junk bonds falling. That would question the rally in stocks for us anyways. Euro didn't really get a bounce off its prior lows stretching back to 2015, kind of hanging out. So here we have 9 E.M.A coming down upon price. We'll see. Perhaps we do drift, in fact, lower to parity in the weeks ahead. And finally, looking at the British pound. So British pound, remember, did have kind of your fake out Brexit referendum, surfaced overnight. Massive gap down, sideways consolidation, fake out, and then another breakdown once you truly broke this low range. and here we are consolidating sideways, managed to break out above that declining 20 E.M.A, and more or less kind of a pennant formation somewhat, but consider it just sideways consolidation bullish. So any break for above that 50-day moving average for us does get our interest for a potential swing long in the British pound. So that was quite a week, short week though for U.S. markets, and we'll look forward to the week ahead. Thanks for checking us out. Take care.